Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to set you up, get you ready for NFP tomorrow. And then we're also going to go through a trade idea that we had earlier this week for the EURUSD. My compliments to the chef. That was a real good one. We've got some shifting tides in Tesla. All of a sudden, Tesla's really in trouble here. We got a key level in the dollar yen to look at, and we've got to look at gold. We had a great pullback buying opportunity on gold. And now we've got a lesson on when not to trade the orb. And right now, I got a great question earlier today from a veteran trader in the room that's been trading here at How to Trade and that I've talked with for a long time over the years. And I will tell you that his question was absolutely fantastic. I'm going to share it with all you because it looks to me like we're getting into summertime seasonality, and that can be problematic when we start talking about trying to play breakouts. Now, it's been a slow week. There's no two ways about it. I trade gold, I trade crude oil, and right now I'm looking at the E-mini Dow, and I will tell you this, the trades have been few and far between, and it's been really difficult to hit these things and really look to build those huge days, those $500, $1,000, $1,500 days. It's been a challenge. Today, like one trade. I got like one trade, and that's one trade over like the last 2 days. Now, some of the full disclosure, some of the trades that I look to take, I don't really disclose those publicly. Those are my own business off of my own system, which is proprietary. The counterpunch is something I've shared with you guys with the Fibonacci's. That's what I'll put out in the public sphere. But range numbers, different algorithms and things are what I like to use on a day-to-day basis. And I'm telling you right now, it's not there. So we've got to be on our toes. We have to be aggressive when we need to be aggressive, and we got to be patient when we need to be patient. But I'm going to address that towards the end of the stream because it was a great question, and it's one that I think everybody needs to hear, because this time of year, there's a way to trade it and there's a way not to trade it. And I'm going to tell you how to trade it, and I'm going to tell you some of the things that you need to stay away from. So good to see everybody back in the room. Yes, sir. Good to see you over there in YouTube land. T. Marine, always a pleasure, T. Thursday Brutality Feast. Yeah, it's not looking very good. It's not looking very good out there. Slower season coming up. Yeah, we're going to talk a little bit about summertime seasonality and some of the things you need to do to survive. JC, good to see you. JC Lita, always a pleasure, Lita. Okay, everybody, let's go ahead and get on with the program here. I want to start off by just a quick review, and then I'm going to give you the market driver I'm watching. Then we'll move on to NFP. If you have any markets that you want to look at, any questions at all, be sure to drop them in the live chat, either on How to Trade or on YouTube. I'm more than happy to look at any markets. It's supposed to be an interactive trading experience where you can ask questions, and I'll do my best to answer. But once again, a couple rules on this stream. If I don't know the answer, I'm not going to say that I do. Right now, I think I know the answer with the markets, and well, there's the old saying, there's a quick and the dead. Well, if you're trying to be quick today, you're dead. So you got to really be careful when you're aggressive and when you're not aggressive. We're going to unpack all that for you. Okay, let's get started. Remember, we're integrating into the Switch Markets community. There's going to be more on that in the coming weeks and months. We're going to be talking a lot about things that the trading view bridge, that Pine connector. I sort of previewed that yesterday on the Switch Market streams. I'm going to go ahead and we're going to be talking more and more about that, how to integrate your trading view into MT5, and that's really opens up the door for a lot of different brokers that you maybe wouldn't have had access to if you were just a trading view broker or a trading view trader. I use trading view on the live streams because it's easier for me to navigate, but we will be starting to integrate MT5 in there more and more and more as this Pine connector comes into view. We've also got Algo Builder. We're going to be talking about Algo Builder a lot here in the coming weeks and months as well. So for today, it's going to be more of a conventional type stream. I'll answer any questions. We're going to look at the markets and the key news events and see if we can't grab a trade or two. All right, Monday was geopolitical news dominated Monday's session. That was all about, Israel supposedly going to strike Iran. It was all about Ukraine striking deep into Russia. And you'll have to excuse me ahead of time. I'm sort of battling a little bit of a summer cold, I guess, and got a little bit of allergies too with the deep pollen here. So if I'm doing some coughing here, I'm sorry. I don't have a cough button, so you're just gonna have to live with it for a minute. In any case, Tuesday EU CPI, the JOLTS jobs release, not really big market movers. Wednesday BOC interest rates. The Bank of Canada decided to hold the rates static. Today was ECB. ECB interest rates. It was all about the ECB, and they decided they were going to cut their rates and really put some pressure on the United States Federal Reserve. So we're going to talk about that in a minute. And then Friday is sort of the headliner, the Super Bowl this week, which is going to be the US NFP report. Remember, we will have NFP live for you. I'll be on at 6:20 a.m. Mountain Standard Time here in Dillon, Montana, but that's about 8:20 a.m. Eastern Time. So if you're in New York City, tune in about 10 minutes before that NFP drops. We'll get you prepped and ready. I'll show you what we're expecting. I'm going to do that today anyways. I'm going to show you how maybe to trade it, and then we're going to look at some real short-term trading strategies, 9 EMA with RSI confirmation, probably on 1-minute charts. I love that approach, especially in a highly volatile period like we're liable to see following NFP. So big late week action I think is going to be key. Not much happened this week for me personally, financially, but tomorrow, typically I don't like to trade Fridays. I'm trading Fridays. Tomorrow, you have my blessing. It's not a No Nation Friday. Get in there, get aggressive tomorrow. You just got to know how to do it. Or if you're in D.C., that's right, Team Marine. If you're in the Beltway, be sure to tune in. Tune in at 8:20 a.m. Eastern. I forgot about that. In Washington, D.C., I've never been. I should probably get out there and check it out one of these days. Just never been. Okay, everybody, let's start off our basic psychology for Tuesday, Wednesday, Thursday. You guys know this by now. All systems go. Trade. We had a great trade idea here that I do want to review here in just a second. Got a good question here from JC. Can we get into the Switch Markets community if we're in the U.S.? If so, tell us how. You're not going to be able to use Switch as your broker, JC, if you're in the United States. But if you want to be part of the community, You just hear it, How to Trade. Check out the live streams, ask questions, check out the analytics. And then also we're starting to do some live streaming over on the Switch Markets YouTube channel. Just go ahead, go over there, give it a follow. And I do a lot of that in the trading room as well. So just watch the live streams and you're pretty much part of the community. Unfortunately, Switch Markets as of right now does not cater to U.S. residents. So you're sort of out of luck there. But if you need help with a broker, JC, if you need help with a Forex broker or a futures broker, be sure to reach out and I can sort of point you in the right direction or a direction. How's that? In any case, go with our trade follow-up here. Pullback bid in the Euro USD. Really loved this trade. I thought it was a fantastic trade and an opportunity for us really to kill it here. We put something out in a newsletter earlier for Switch, and or at least that came out Tuesday for Switch Markets, and I talked about how it was probably best to be bullish here, the Euro US dollar, at least until we tested 2025's high. Now, it's been real good trade. We had a pullback bid down there from right around 38%, somewhere right around 113.61, just above that, and we nailed it. Absolutely nailed it. This trade went up and got its pips very, very quickly. It was about a 50-pip winner. I love those kinds of trades because we didn't take any heat. We did have to stay in the market a little bit, which did expose us to some systemic risk. Boy, say that 5 times fast. But I didn't mind being in the market because we had a solid out. We had a great support zone. And more importantly, we understood market state. We understood that the bullish trend is still intact for the Euro USD. Now, even though the Euro came in, the ECB came in and cut their interest rates, it really just didn't seem to matter. I mean, we drove participation of the markets, and that participation bid the Euro against the dollar. So what we saw was absolutely just a slam dunk trade. I loved it. Today's range, you can see we sort of topped out up there at about 114.95. Shouldn't have surprised anybody. 115 is the lid on this market, at least for right now. And so now how do we trade this? Well, I mean, I'm still bullish. I would never abandon my market read. But with this much action coming in on the back of the ECB, if I wanted to trade it right now, I would have to dial this thing down to a 4-hour chart. And something like this is sort of interesting. Now, you'll notice how big I'm making the chart. I got to manipulate it to see it, and that means that our ranges aren't as big as we really would love them to be, but we can still maybe build a trading idea here. And there you go. There's your big long tail in your wick. Typically, there's a lot of business that gets conducted in wicks that we don't really see. We think of the bodies of the candles as being the value areas where everybody's lining up. The buyers and the sellers are duking it out. Not necessarily the case. But what I will say is this. If you guys are smart money concept traders, a lot of you are, that's a liquidity sweep. I mean, it is. I mean, listen, they'll argue with me all day long and say, Shane, you don't know what a liquidity sweep is. I go, yeah, it is. Right there, you got a massive spike on the news, went right up to 115 even, just in front of 115, 114.95. Sellers stepped in, swept it. That was over. That's what we call a failed auction right at 115. I'm going to show you a failed auction in crude oil futures here in just a second. But that, in my view, is a failed auction at 115 flat. Sellers stepped in, dominated. In my view, that's a liquidity sweep. The bidders took the price up there. The sellers stepped in and just knocked them out of the box. So right now we're trading about 114.44. I love the bid. I still love the bid. It really lines up with what we would like to do. So right there, 114.39 is the back end of your 4-hour golden zone. Spike low, spike high, pullback. 62% is the end of that golden zone. Okay, so the area between 50% and 62% is called the Fibonacci golden zone. I absolutely love the back end of that zone. 62% is my favorite. 38 and 62 are my favorites. I'll also trade 78. I really like 78. I don't go near 50%. I've seen too many folks just get absolutely annihilated trading 50%. So if we were interested in putting on a trade right now, and let's go ahead and just get up our paper trading here on TradingView and go ahead and see what we've got going. Been a pretty good run on the simulator, huh? Plus 94,000. That ain't bad. In any case, something like this, we can step up and just bid the market from right here. I don't have a problem at all with that, and that would just be a flat market order and go ahead and buy it. So why did I buy right there? Number one, for entertainment value, we need to get a trade going here. But number two, it's not bad trade location. You say, Shane, I mean, you're buying 114. Yeah, but I got a feeling that we could definitely go back and retest 115. Is this as good as the trade that we had, our trade idea? No, of course not. Our trade idea was dialed in and beautiful. But this 4-hour chart right here, you can see nice compression, doji, positive candle, big break, failed auction right there at 115. We come right back down to our golden zone. I have a bullish bias toward the Euro USD. The USD is just getting absolutely smoked right now. Again, I mean, we're getting a little bit of a rally today in the DXY. We're almost even, but every day we're opening up with red prints. Every single day. So for me, bet against the US dollar until proven otherwise. I think that going long here, Euro USD 4-hour chart isn't bad. So remember, every trade has 3 parts. Every trade has 3 parts. You got an entry. Okay, we've nailed our entry. what should our exit plan be? What should our exit strategy be? Well, for a profit target, I want to be fairly conservative with it. I would be shooting probably somewhere up in here, somewhere up in the middle of this tail. And I mean, this isn't an exact science, but we can make it one. I mean, we go right here. Okay, I'm in at 144.45 is where I'm long from, somewhere in there. Just go right up there to maybe 74.75. That's 30 pips, something like that. Nice one-to-one risk versus reward. And where am I at? Let's go 30 pips down. It's going to be somewhere right around 15. That gives us a pretty good chance to win. And the beauty of that is, if we do get stopped out, it's not the end of the world. It just isn't the end of the world. Very, very, very good trade right there. I think that that's not a bad one to let grind for a while. But remember, you've got US NFP tomorrow, and that's going to shake this. That'll shake the foundations of this market. So be careful if you're trading over the next 12 hours. Well, not 12, but the next 18 hours. You're going to want to make sure that you stay frosty and stay in the game. But that's what I would be looking at for the EURUSD. I think that's a pretty good one. As far as our main market drivers, it's something that we really have to be aware of what's coming. The strikes against Russia were deep inside Russian territory by the Ukraine. It was a drone strike. It was a serious operation. We watched the videos yesterday. We saw the bombers just being blown up. The Ukraine leaked a little bit of footage on how they got the drones into that deep into Russia, and they basically took them in containers that looked like mobile homes. It was an amazing strike, really it was, and it definitely caught the Kremlin off guard. And what I would say is there's going to be a retaliation. There's no question about it. Putin's not going to let this pass. So the real question for us is, what does the retaliation look like, and how big is it, and what is it going to impact? Well, in my view, you're going to see a major retaliation, and I think it's going to be against Kyiv. I don't know that. I'm not a military strategist, but this looks to me like the gloves are going to come off in a big, big way, as if they already haven't over the last few years. But I think you're going to see some. I wouldn't be shocked if they dust off those hypersonic missiles and do something on a major, major city there in the Ukraine. I don't think that those strikes are going to be let go, and that's on the back of an assassination attempt against Putin last week. So remember, I don't care what side of this you're on. I don't care what your politics are. I don't care what your views are. It's our job to understand what can move the markets and what we need to trade. And I'm telling you right now, this retaliation more than likely is going to come over the weekend. It typically does when the markets are closed. And the market you absolutely have to be watching is gold. You have to be watching is gold, because if in fact this is a major, major, major strike, remember there's NATO assets all over the Ukraine and all around it. This could be an event that triggers Article 5, which in fact would mean that everybody's got to rally up, and then you're going to see a broader war against Russia. Now, do I believe that's going to happen? I genuinely don't know. I don't know. Nobody does. But I'll tell you this, the stage is set. And if something like that does happen, you're going to see a major, major break in gold, and it's going to be bullish. So if we're looking at our charts, this was really a level that I pointed out yesterday. Really a beautiful, spike low, spike high, pullback. We're right around, 33.36-ish, 33.37.50. Pretty darn good areas. So this still is fairly bullish area. We came down, sort of got a nice bounce. If I was going to be trading this gold right now, I would be cheering. I would be absolutely cheering maybe for a huge NFP number and some bearish number on gold, some bearish action on gold, so I could buy a pullback. Now, I don't like doing that. That mindset's really difficult because we start projecting on the market. And when we project on the market, we typically get burned. Every time I've sat there and said, oh, this market's going up no matter what, it always comes down. And that's sort of the nature of markets. It really is. I mean, that's the nature of markets. So if I'm looking to trade this type of a formation on a weekly, it's really hard for me because, number one, you've got the big move here, and you've just absolutely sort of flatlined and chopped everybody to death over the last 6 weeks. Not necessarily out of the ordinary. We've seen gold go into long periods of rotation. But for right this minute, we've got to be real smart about what we're doing, and we got to understand where our levels are, and we can't get caught on the wrong side of a breakout. So this was a concept that I covered yesterday. I talked a lot about gold because it's important that we understand where the key levels are. Right here, there's your big monthly run. So your all-time high is going to be right up around 3,500, okay? You got to know where that is. And these aren't exact. I'm just eyeballing this. 3,500 is going to be your all-time high. Okay, what else do you have? You've got last month's high. Last month's high is where? 34.35. Boom. Something like that. This is your bullish breakout. If you're talking about gold, JC, this is why. You've got the technicals, Remember, I'm a hybrid trader. I haven't said this in a long time. I'm a hybrid trader. What I do is I look for things that are going to move the market, and then I step in with my technicals and I trade accordingly. This is a textbook according to Hoyle breakout here in gold. This formation, there's no question about it, and especially because it's on the monthly time frame, it gives it that much more validity. It means we've been trading in this area for a long, long time. Now, you say, okay, what about this one right here? Yeah, same type of thing. You got a little bit of a pullback there, an inside month, and then the break. I think you're seeing the same type of thing happen here. I really do. And if, in fact, you see an Article 5 or you see something big triggered or a widespread escalation of Russia-Ukraine, which I'm telling you, there's a lot of people talking, and none of the news is really good out of that region right now. We thought it would be wrapped up. I was one of those guys that thought this would be wrapped up almost, not immediately, but within probably 6 weeks of Trump taking office. I figured it would be wrapped. The deals would be made, and it's not happening. The escalation typically starts with one side or the other. It's weird. War's a weird thing, guys. I mean, people fall into sort of a status quo. Okay, we're just fighting and the casualties, and everybody sort of gets used to it. I know that sounds crazy, but the rest of the world is really, especially the financial markets, have gotten used to what's going on in the Russia-Ukraine. The markets are used to it. The only thing that can really shake things up is a widespread escalation. And in order for us to be traders, we have to be looking a little bit ahead. It doesn't mean that we have to be right. Listen, I'm not a talk show host. I'm not going to sit here and say, oh, I told you. I don't know what's going to happen. But I will tell you that if you take a look at the eventualities, that type of a strike, a big-time strike from a hypersonic missile on a huge target in the Ukraine may trigger Article 5 of NATO. And if that happens, there will be a direct call for U.S. to put boots on the ground there. And I don't think that's going to happen. The markets will go crazy. The markets will go crazy. So we've got to be ready for it. I don't know that it's imminent. I don't know that it's coming. But I can see that the stage is set. And this type of price action reinforces exactly what I said. Nice big rally. And the things started calming down back in May. They really did. They calmed down. We had a doji setup there. And the reason why we had a doji is because nobody knew what was going to happen. With monetary policy, we're starting to get a pretty clean look at what's going to happen. The rest of the world's cutting interest rates. The Fed's going to hold them higher for longer. We get that. But right now, what's going on in gold? Is the geopolitical uncertainty over? The answer is no. No one knows. That's what that doji means. From my experience, typically when you wipe out a monthly high or a monthly low, you're going to get that break. And if in fact you get that break over last month's high and you run it up and take out 3,500, we're going to 3,750 and 4,000. It happens fast. It happens fast, within 48 hours, something like that. A lot of folks believe 4,000 is going to be the top this year for gold. I don't know. I'm still thinking 3,500 might be. Until proven otherwise, we have to sort of take that as being the high water mark in this market. But I'm telling you guys right now, at key levels, I would be very, very careful. I'll tell you what you don't want to do. If we break above last month's high on this news, which probably will come over the weekend, you don't want to be holding shorts because there's no rules on how high it can go. And you'll get a margin call and get eliminated. So for me, that's the big mover and shaker. NFP is going to be something completely different, but that's going to be the one that I'm watching. And this formation on the monthly key levels, guys, that key levels video, monthly highs are huge, all-time highs are huge, big round numbers, throw 3,500 in the mix, and that's huge. So that's why I say that, JC. Let's see, T. Marina, you can always find a free parking in the D.C. area. All right. Yeah, on the Beltway rush hour. I've seen some of the pictures, that and down in Los Angeles. What is it, 405 in L.A.? It's a damn parking lot. Let me see, trade a Lockheed or other defense stock? You certainly could. You could try to pick those up. I don't know. The stocks are really tough, though. The stocks are a lot different than commodities. We know we're going to get a big rally out of commodities if we get that scenario. But an individual stock, I don't know, maybe an ETF, maybe a defense ETF, something like that might get a nice pop. I just like the broad-based coverage that you get with something like a gold. In any case, that's how I'd be looking at it. As far as going into tomorrow's NFP report with gold, this is the chart. I mean, this weekly chart, I really got nothing for you. I mean, I really don't. I mean, this really illustrates the compression, that spike high. I think that it's possible. It's possible that this breakout comes. I just don't think it comes on NFP. If you wanted to play something like this, you could play rotation. You could do something, right from that spike low right up there to that spike high, and potentially be looking to bid somewhere right around 33. Yeah, I don't have a problem with that at all. 32.95s, maybe 32.28 if you get a nice big pullback, but I don't think it's going to move that far. You probably could bid 32.97.50s and be all right, but we could easily see a $50 range in the next 24 hours. We could see a $100 range. Right now, my range oscillator, I believe, is 80-something, 78 or 80, which sort of predicts how many dollars it's going to move in a day. Something to think about there. All right, guys, let's go ahead. We got some fundamentals to hit and then some more key levels that we want to get to, but pretty good trading opportunities really all over the board. News of the day. The big news of the day was out of the ECB. ECB came in and they cut interest rates. They cut the deposit rate, and they also cut their interest rate, their main lending rate, by about 25 basis points, which is fine. Everybody sort of expected that rate cut, and it came anyways. Still interesting to watch the euro-dollar rally on the back of rate cuts and a hawkish Fed. That means somebody's dumping T-bills on the market. We'll talk more about treasuries maybe tomorrow. In any case, continuing jobless claims is the other big number that we've really started to watch more and more, and those are the folks that are staying on the rolls. I know I always say initial jobless claims, but continuing jobless claims are starting to gain a little bit of power. What I mean, or a little bit more importance, and the reason why is we're trying to figure out if that job creation's there and people are actually able to get back to work. We're not seeing it in any case. Came in a little bit lower than expected, but still relatively high. And you've got 247,000 on initial jobless claims, which is going to be sort of the big weekly figure. Sort of shows you that we are sort of putting more people on the unemployment rolls, which is no fun. Non-farm productivity, see all that. Trade balance is interesting, though, for me. Trade balance shrunk again. Came in lower than expected. So pretty interesting stuff there. So what does all that mean as far as, what is our currency going to do? Well, it's sort of leading us into what NFP is going to be. Now, NFP, the Fed right here, is going to take a stance off of NFP, and it really is all predicated upon this. If you do see this CME Fed Watch is a great tool and a great way to monitor what interest rate expectations are. Right now, we're not expecting any moves at all. At the next meeting, which is coming up on the, the 18th of June. All right, so about 2 weeks, somewhere in there. We're at 97.4%. We don't believe that we're going to move at all. Okay, how about in the July meeting? 68, about 70% that we stand pat. We're not expecting a rate cut in the United States until when? September. That's a long ways. That's a long time. And you've got the rest of the world that are already cutting interest rates. It's going to be fascinating to see what happens to U.S. stocks with a tighter one. So it's definitely going to be different. Yep, Toonie, good to see you. Or do you? Nice one, boss. Yeah, absolutely. In any case, something like this is fascinating because you're not going to get your rate cuts. Remember last September. Now, if we only get one rate cut the first 9 months of 2025, last September before the election, the Fed said they were going to cut how many times? Up to 5 times this year. They haven't cut once yet. That's a problem. That's a potential problem, a potential bearish market driver, but it's also not supporting the U.S. dollar. So right now we're in a no man's land where inflation it's entrenched, it's persistent, but they don't have any reason to cut the interest rates right now. Do you need a cut? Stocks at some point or another are going to need a cut. Now the real question is who's going to cut them? Well, that is the question. Dollar yen. So what happens if we don't get those rate cuts? Theoretically, you're going to get a big rally here in the dollar against the yen, but we're not getting it yet. And the reason why is because the U.S. dollar is very weak, and right now the BOJ is sort of taking a hawkish line. In a lot of ways, this is a complex idea, but in a lot of ways over the last 20 years, a lot of people believe that the Japanese economy and the Japanese yen has been used to fund the global equities bubble. They believe that because of carry trade. What you would do is you would go in and just get a bunch of yen real cheap and then invest that somewhere else for a return. And those yen being taken out of Japan and put into other markets theoretically drives prices higher. Okay, I get all that, and that's fine and dandy. So for us, when we see the yen really recovering, I mean, look at this, a monthly chart. I mean, if you'd have told me this was going to happen through the first 5 months of 2025, I would have lost money. I would have bet against you. But take a look at it. All year long, it's been just a fantastic rally from the yen against the dollar. So if I'm a trader, if I'm a Forex trader, I'm saying, okay, what should I be doing right now? Hey, man, the trend's your friend. Let's not make this hard. A pullback right there to 147.19-ish, that's got to still be a great sell. So 147.09s, that 38% somewhere right up in there, we can get that. Now, do we get it on NFP? No, but we might get it early next week. So that's a level worth watching. Very, very important that we understand that. As far as NFP goes, let's go ahead and just get you prepped and ready. Average hourly earnings, all that stuff doesn't really mean anything to me. There's two numbers here that I really care about. Number one is going to be just the non-farm payrolls number itself. That's the number of jobs created over the last month or so. We're expecting 127,000, well beneath 177. So if we're looking at that, we're saying, okay, we expect jobs to come way down. All right, but we're not expecting our unemployment rate to increase. So it's supposed to stay static at 4.2%. So for me, I look at a chart like this and I go, okay, what means anything? What really means anything? The non-farm payrolls does. The job creation number does, because that's going to be on every headline in the financial markets from now until, the next NFP. You can already hear it. I mean, if it comes in low, they're going to call it the Trump slump. They will. That's what's going to happen. So to me, the thing that really matters is the unemployment rate. Now, if we see unemployment start ticking up to 4.3, 4.4, 4.5, then you're going to have to get a rate cut somewhere. That'll bump up our expectations for a rate cut probably to July. Now, if we don't see a move in that unemployment rate, then the Fed's probably just going to stand pat and say, listen, we've got to fight inflation, and we've got to figure out a way to do that. Typically, that means rates need to be held higher for longer. So right now, we're expecting anything. I'm going to go out on a limb. I believe unemployment's going to click higher, and that's going to put a tremendous amount of pressure on everybody involved. Trump will blow a fuse. He'll go on social media. He'll start yelling at Jay Powell, saying it's your fault. And then Jay is basically going to say, well, it's the tariffs, and everybody's going to be pointing fingers at each other, and nothing's going to get done. This is an interesting predicament for U.S. equities going into the summer months, and we got a lesson about that in here in just a second. For just sort of perspective, this is what you've got going there. Not really the best, the best barometer. What do you got, about a year, something like that? Sort of flattened out over the last 4 months. So really, job creation isn't where it was back in November, December. But then again, I could say that the books are cooked, and I'll be talking a lot about the books being cooked tomorrow. Tune back in NFP Live, and I'll show you how they pull off these tricks, these magic tricks. This is the one that's important to me, guys. It's the unemployment rate. It really is. This is the one that bears the most value to me. 4.2% last July, last August. We hit 4.2 again in November. We hit it again in March. We hit it again in April. I think we're going higher. And I think as soon as we go higher to 4.3 or 4.4, it's going to be panic at the disco, man. It's going to be really difficult for anybody to justify staying to a hawkish monetary policy while you're losing jobs. Remember, the Fed has two mandates. One job, two mandates. Pricing stability, maximum employment. As soon as it looks like the maximum employment's out the window, you already don't have pricing stability. But as soon as maximum employment's out the window, they're going to have to cut rates, and they're going to have to be aggressive doing it. This is going to be fun stuff. Be sure to tune in. I can't wait. So I got to get up early here to do it, but I'm excited. I'm always excited for NFP. It's always a lot of fun. Okay, the biggest thing that we got to remember going into this key release is, the dollar. The dollar will be front and center. This is a good look at the dollar index. I sort of got some real rudimentary stuff for you here, but that spike low from September of 2024, that's sort of after the carry trade came unwound with the yen last year. And you got what? You've got a nice, really key level right around 100. Compression break. Guys, this is incredibly bearish. So anytime I see a big trend and a move, I've got to always go back to my chart and really what I call the modern era of finance. And that goes back to COVID, the COVID craziness, somewhere right in there, 2021. What do you got there? 2019. Craziness right here in March of 2020. The dollar lost a ton of value. It was down in the 80s. Well, the real question was why? Because we pumped the system full of dollars to try to stave off a depression or an economic catastrophe. So the dollar lost all its value, and then it made a big comeback. It was one of the first ones back, and then you starting to see it really waver now. So if we're looking at a legitimate level, a legitimate support zone, since COVID, that represents the COVID era, that macro wave from 89 to 115. Look where we're at. Now, you're not going to find these levels anywhere else. There's nobody on CNBC doing this. They should be, because the levels don't lie. Right there, compression, right around the golden zone, traded absolutely perfect in May. And now what are we doing? We're starting to trend beneath that 62%. That tells us that the bottom is potentially could fall out of the dollar. And that is strange because you don't have a situation where you're cutting interest rates. So you're not cutting interest rates. The dollar is still going down. The likely culprit, somebody's dumping T-bills in a big, big way. Most of us believe it's China. Don't really know. I don't really have any affiliations with the Chinese Communist Party. I could call them up and ask them, call the PBOC up and ask them. Said, hey, what are you guys doing? Dumping T-bills? And they say, who are you? I'm Shane Vernier, Dillon, Montana. How to trade. I don't have a press pass, but I could act like I do. All right, guys, we got one more concept to go over today, and then I'm going to call it. Let's see. T. Marina. Also, doesn't Japan manipulate the Forex market when they increase their interest rate in order to keep their currency in their happy range? 100%, T. 100%. when you start talking about, well, I mean, when you start talking about the Bank of Japan, the BOJ, it's called a dirty float. And what the dirty float is you have to keep your currency within a specific range to promote the three pillars of Abenomics, which means what? You got to keep it devalued. That yen's got to be devalued. So your exports are hyper competitive internationally because you are on an island, hyper competitive internationally. And also you got to get those exports to really take flight so you can get that FDI, that foreign direct investment into Japan and grow the economy sort of from inside out. It's interesting. I mean, Trump wants to do the same thing. He doesn't care if the dollar goes down to nothing. It'll make your exports hyper competitive. Well, that also hurts a lot of folks too. It hurts savers. So there's a happy medium in there. I can tell you that the Bank of Japan does not play fair. It's called a dirty float. And you can look that up if you want. They always want to sort of devalue their currency and keep it within that happy range. But you're right. The way that the BOJ does business, they'll step into the Forex. They'll manipulate it directly. They'll just step in and start stockpiling or dumping yen accordingly. They'll also manipulate their deposit and their lending rates, but they'll do it with what's called a yield market cap, and that's some hard stuff. I'm not even going to explain it. It's too hard, but it's very, very advanced stuff. But the way that they manipulate the yen to keep it within that happy zone, that's no joke, and we have to know that if we're going to be trading the yen. For me, I just look at price action and when the BOJ speaks, because I know that Japan does not want their currency to ever be very, very strong on the global stage. So it always makes it pretty good to bet against it, but those that have bet against it this year, it hasn't gone very good. Now, Great Britain pound, Japanese yen, what would we be looking to do right here? A little bit of compression. We outlined this one yesterday on the Switch Market stream. I would just go ahead and buy it. The question is where do you buy it from? Kind of already missed. You know, you got your 13-period EMA down there about 192.50-ish. This week's low is down there around 192.73, so that's a challenge. Let's go to a daily, see if we got any love on the daily. Not really. So right here, you've got compression. This is a fantastic example of summertime trading, what I'm talking about. Nothing's really happening. You're going sideways. You're getting compressed. So we could play pullbacks all day long. I mean, we could do something like this. We could say, okay, I'm going to wait for the pullback, and then I'm going to try to get with this 4-hour pressure. And it'll work just fine. The thing is, you got to be able to really not dumb down necessarily, but you have to be realistic with what you believe your profit target can be. Because the market just flat isn't moving. This isn't a breakout or a trending market. You get hurt really bad doing this, especially when the market's quiet. So I would be careful buying pullbacks and playing breakouts and things. If, in fact, you wanted to play a crossover, you could play one, but, boy, I would do it on the longer time frame. Just go look at Tesla falling apart. But let's put that guppy on this. Let's see. Your bid would have been right there. Excuse me, or that doji right there. A lot of times these dojis, they don't have enough room to color them gold, but that would have been your gold bar. So theoretically, you could have been long here on a daily. But let's take this down. I really would recommend if you're going to trade Forex using a crossover strategy like the 920, yeah, there it is. I mean, there it is right there. Something like that. So there was your bid. There was your crossover. The sell signal did not work. Reversal. Now you're crossing over. Would much rather be long than short here. I think that's a pretty good trade. So, you know, of course, it happened 8 hours ago. But if you've got your codes up and running, that's easy to see. That would be a tough one to miss. So you've been buying in right there at 194.67, and you've already printed a little bit of money. So pretty good stuff. Pretty good stuff right there. All right, guys. What we need to do here is cover one last concept. I got a great question. I got an absolutely great question earlier today. It was from a veteran trader. So the question was this, and it was, Shane, how do you make a living in these markets when they flatten out and things dry up? And I told him, I said, very carefully. The flat market separates, I mean, this is just a figure of speech. I know we have a lot of women watching too, but it really does separate the men from the boys, the women from the girls. When the market flattens out, there's a million ways to make a mistake. There's a million ways to make mistakes. You can try to play retracements and get faked out all day long because the market's not going anywhere. You can try to play breakouts and get faked out all day long because the market's not going anywhere. You could try to play range trading strategies, is what I specialize in, definitely during the summer months, where I have a set of sort of like pivot points that are on the outside of price for the U.S. session that I'm looking to play against price action back to a mean. It's a great strategy, and it's designed beautifully for flat markets, but the problem is very rarely do you get a trading opportunity. When the market flattens out and things dry up, this game gets really hard. Anybody can make money in trending markets. I've seen so many guys on YouTube and so many gals on YouTube just sit there and they strut around. They go, oh, I made $500,000 this year, $300,000 this year. And there was a lot of those back in 2021 just betting against the yen. All they would do is just show up and take a position against the yen. That was it. That's all they had to do. The yen was getting slammed by pretty much every major. It was easy. Well, we don't see that now. This is not happening now. Right now, our markets are they're a bag of rattlesnakes. I mean, they're going up, they're going down, they're going up, they're going down, they're going sideways, breakout, trend day up, trend day down, sideways. There is no direction right now. There is no direction. We could sit here and say that the long-term bullish trend is still very much intact. I mean, I could sit here and tell you risk assets, yeah, they're still trending higher, and theoretically they are compared to where we've been. Okay, that's great. But are they really moving? And the answer is no. So if you're going to trade flat markets, be very careful trading breakouts. If you're going to trade breakouts, play them tight. Play them tight. Understand that leverage is very important to your success. Don't bet at all. Your 1% to 3% will bail you out in these type of market conditions. It really will. The other thing is this. If you're a Forex trader and the markets aren't moving, start looking at commodities. Start looking at stock indices. If you're a stock index trader and the stocks aren't moving, right now is a killing field for stocks. If you're trying to trade the US 30, US 500, US 100, you're really struggling. So start expanding into other things. Start looking at currencies. A good trader, a professional trader, is going to be able to do a lot of different things. You're going to need to be able to trade trends. You're going to need to be able to trade breakouts and rotation. You're also going to need to be able to trade multiple markets. You're going to need to be able to trade stocks. You're going to be able to need to trade Forex and commodities. Now, you don't have to do all this right away. But when the markets slow down, the question was, how should I try to make it? And I would say, well, if your market is slowed down to nothing, you need to find another market to target and start learning all you can about it. Very, very important. Very important. So, in short, diversify. Here's a great teachable moment right here. This is a 15-minute orb right here. This is your US 30 15-minute orb. There was the first 15 minutes. There was the second 15 minutes. Now we're waiting for a close outside of that range, and we got one to the bull. So there was our close, and you can see that this position's just eating it ever since we took it, right? So the question really becomes now, okay, how do I execute? Well, we're already in the trade. Stop loss is right down here at the bottom of your range. Profit target's got to be at least a 1-to-1. What makes this really difficult to make this type of strategy work in a flat market is hitting your targets. Markets don't have to move. There's no guarantee this thing's going anywhere. What would move the markets today? Something out of the White House, maybe something from Trump's Twitter account. Maybe. NFP tomorrow. A lot of ambiguity about what we're going to be seeing here from a geopolitical standpoint on that Russian retaliation. I know we don't want to think about things like that, but we have to. Markets are on pins and needles, but they're not moving. Our VIX is down around 17.3. That means that the volatility has just absolutely dried up. And when the VIX gets that low, it can be tough. It can be tough to trade. Pretty much you're just buying and hoping the market goes up. Well, hope's for children and losers. Right now, I don't know that we go up and hit that target up at 42,838. But what I do know is this. We've got a pretty darn good system there. We've got a good stop loss. We've got a good entry, and we've got a potential profit target. The problem when the markets flatten out is our targets don't get hit. Our stop losses are always going to get hit when we're wrong, but that follow through, that extra oomph isn't there. And you see that a lot right now in the summer months. And I'm starting to see signs that, yeah, we're rotating. We're going into rotation. And what that means is we chop sideways June, July, August. There's going to be some good trading days in there, but instead of showing up and it just being a light show every single day like we've been seeing over the spring with a lot of volatility and a lot of opportunity, you're probably only going to get a couple setups a day if you're an intraday trader. So you got to be very careful. This is not the time to be piling on the 5 to 7 to 10% risks. This isn't the time to be doing that. You can still make money, but you've got to bring your expectations down. You got to say, okay, maybe I'm not going to make $10,000 this month. Maybe I'm going to make $2,500. Maybe I'm not going to make $500 a day. Maybe I'm going to make $100. That's my mindset right now. That's hard too, because when you show up and you trade, you want to make money, but you don't want to end up giving back everything that you've made just because the market's flat. Now, things will open up for us. Tomorrow should be a good day to trade. NFP going to bring some volatility. But for the rest of today, I can't make a case for anything doing much of anything. So I hope that helps. Team Marina, play the pendulum. I mean, if you were talking about a pendulum strategy, like let's say you wanted to go to the 30-minute chart, what would your pendulum be? Probably wouldn't want to do that. There would be your opening bell, ding, ding. So right here, I mean, if you wanted to go pendulum on this, we covered the pendulum yesterday. This would be your range. US 30. Session low, session high. Two ways to play the action, guys. Two ways to play the action. You could be in a pendulum. You could be a pendulum waiting for a test of this and then sell back down into this range. Or you could be playing that orb, which is just going to break. Which one do you think's safest? Probably the pendulum right now. Probably the pendulum. But the orb could work. It's just a question of, do we get the opportunity to really break? I just don't know that we break. So that's what I would say about the US 30 there. Let me see gold and Forex traders. Let me see Phil Suncoast. Good to see you, Phil. Totally agree. Summer consolidation is probable. I think it goes all the way to Labor Day, if I was saying it. But there's a lot of money to be made in consolidating markets. We've just got to get them to open up a little bit more. I mean, today in WTI crude oil, I'm not even going to cover it, but it was a joke. We're trading 63.29. We topped out right under 64. Tried to play a break over 64. That didn't work. Took a small loss there. I was lucky. I got another play on gold. Actually going to turn a profit today. But, I mean, I like days where we have 10 trades, where you're looking at 8 to 10 setups. You 2 setups. I mean, it's really tough to be perfect. We want to see more volatility than this, and we'll get it tomorrow. Let me see. Gold and Forex traders. What about gold, buddy? Man, I covered gold ad nauseum. Go back and watch the replay. I appreciate it, though. Thanks for stopping by. It was basically just a breakout trade. I mean, we're talking about getting long. We're talking about potentially getting long maybe from down in this golden zone in the weekly. But the monthly gold, the monthly breakout numbers are what I'm looking at. Last month's high and also 3,500. Let me see. T. Marina, so swing trades won't see many uptrends. How much less does a price swing in the slower season? Yeah, it's impossible to know. Here's the thing about the slow season. I just went off on a tangent about how the market flattens out, and there isn't as much volatility there. So if you're playing breakouts, you could be in trouble. That's part of the problem. The other part of the problem is when the market does move, it just jams. I mean, it just breaks out of nowhere, and these what I call sweeps. These guys will come in and they'll just sweep the market, and the market will just explode for no apparent reason. I saw it today again in crude oil. We had a 1-minute bar that was just ridiculous with a ton of volume. So the conditions aren't necessarily optimal. They're not as good as you're going to see from Labor Day to Thanksgiving, I can tell you that, and they're not going to be as good as they've been from January all the way till the end of May. They're not going to be that good. Now, probably early May. It started to really fizzle there towards the end of May, but you can still make money. There's just not going to be as many opportunities. So when you start talking about swing trades are tough. It's tough, especially if you're trend following. More than likely, you're going to be in those trades for a lot longer than you usually are, and that's going to eat up your things like swap fees, overnight fees, carry fees. I mean, it can get really difficult to swing trade this environment, but it can still be done. So what I would recommend is the way that we manage this stuff is we just dial in our risk. Know where your stop loss has to be. As long as you know that and you don't go crazy with your leverage and your position size, you can do well. It's just not going to be as target rich as it's been. And that's the biggest challenge that a lot of traders have that haven't lived this thing for so many years is when you get used to firing on all cylinders, when you get used to taking a lot of trades. Okay, boom. Okay, I lost a little bit of money there, but I can get it back here. Okay, well, I'll take a big loss here, but then I'll get it back here, here, and here. When those opportunities don't keep coming, you're going to find yourself typically on the negative side of the ledger a lot more than you want to be. Just because, A, you can't make up for losing trades as quickly, and B, you miss trades because it just gets boring, and you wind up going, I'm going to wait. I'm going to go do something else. It just slows down. So a couple of the things that I said to the trader that asked me that earlier today, I said, listen, one of the things that's helped me, number one, is open up other markets. Is if the market's dull and you don't see anything, start doing research, get another market going, start watching something else, maybe diversify your trading approach. It's a great time to do it. It's slow. The second thing is be more aggressive early in the day. at least during the U.S. trading session. That's when the liquidity providers are there. That's when the people are there trading. Sometimes I told them, it's flat out, I don't like to trade for the first 90 minutes after the bell. I like to see everything set up, and then I know my levels are going to be very, very strong towards that mid-session, late session. I know that. You don't get that now. Basically, everybody shows up in that first hour of work. They go to work, they fire their guns, the market moves, and then it settles down. And once it settles down, it's really difficult to trade. So what I would say is, with your strategy, maybe be a little more aggressive earlier in that U.S. session or during that London-U.S. overlap. That can help you. Trade when we need to be trading. I can tell you right now, I'm not taking a trade the rest of the day. I'm going to watch this and see how it pans out, gear up for NFP, trade right after NFP, and trade that NFP open. And we'll have an opportunity maybe to make some money. Bob, good to see you, Bobby. All right, everybody. Gold and Forex traders. All right, last question. 34.40 is possible on NFP. Anything's possible on NFP. 34.40. It's $100 higher from where we're trading right now. I would have to see today's U.S. close, Golden. It is possible. Do we want to hold longs? Where would your stop out be? Where would your stop out be down in here? That would be a challenge for me to hold a long. I would much rather be holding longs than gold, though. If you're saying gun to your head, what do you want, longs or shorts? I said longs, please. Longs all day. But that level's big, 34, 35-ish over last month's high. I believe fully if you take that zone out, if you take 30, that area right out there, that 34, 450, if you take that out, you're going to 35, and I think it happens fast. We just got to wait and see what happens, guys. Let me see. I'm sorry. I am terrible. I am absolutely terrible with pronouncing names. I believe it's Wow. Lapa. Welcome. New name. Welcome. Hi. How many hours until NFP? I don't know. Let's see. 12 hours is going to be 11:47 p.m. So then another 6. I don't know. 18 and a half, somewhere in there. 18:45. Something like that. Be on it 8:20 a.m. Eastern. So, yeah, right there. It's on our schedule. 18 hours, 32 minutes, and 18 seconds. I'll be live, and we'll be going live, and we'll be getting it. And I can't wait. All right, one last question, then I'm gonna go ahead and sign off. Went way long today. Thanks for all the questions, though, guys. You ask as many as you want. Maybe we'll just do a Q&A session if you guys want just to talk. T Marina. So let's see. Yeah, T. So you could see a plateau in your equity curve and/or a bit of a drawdown. Yeah. Yep. When I first started, it's funny because I had 2 real pivotal times in my early trading career. And the first one was when I first went live with the 7V Bar Trading Group. And I started trading, when do you think? I traded all spring profitably. All spring. Knocked it out of the park. I went live towards the middle of June, end of June, and I mean the market flattened out. And the breakout strategy that I'd been using didn't work. I got crushed for about the first. I mean, it's made some money, but I wasn't doing really anything. I just was sort of scratch trading. And then the second time was after the 7V Bar group disbanded after the director, my uncle, passed away. The whole thing just sort of dissolved. And I had a chunk of my own money. And I said, well, you've been doing this for a while now. Let's get in there and see if you can make a living. And guess when that was? July. So 2 real pivotal times in my career were over the summer. And I was trading real similar type strategies, which were basically just compression breakouts using market profile, really advanced stuff. I haven't covered any of it here because it's hard. But that's what I was looking to do. I was trying to do that. And both times I just didn't get anywhere. It wasn't like I was losing a lot of money. I just didn't get anywhere. I couldn't figure out how to make any money. I was sitting there going, well, after commissions and slippage, I'm down a couple hundred or down 100 for the month or up 100. It didn't matter. It wasn't getting the job done. And that was back sort of in the heart of not the depression, but the big recession. So I'm biased when it comes to summertime trading. However, last summer was fantastic. I got into a groove trading the E-mini S&P 500 futures, had my range numbers, and I was hitting at least one of them every day, and I was doing very well. And I intend to do the same type of thing again this year. But just for right now, I can tell you, after watching the way crude oil was today, crude oil is going to be a tough cookie. Gold wasn't bad. We got a decent move out of gold, but it took a while to develop today. And then equities were just absolutely brutal. They haven't done much at all. So to answer your question, it's not necessarily that you will lose your life savings unless you're stupid with your leverage. But what can happen is you can put a lot of man hours in front of these screens and not have a damn thing to show for it. And for me, that's almost as bad as losing money. So the summertime is a great time to develop as a trader. You're going to develop that patience. Going to take your time. When those trade ideas come up, though, when those trade opportunities come up, you got to hit them. That's why it's important that we don't miss our trade setups now. When it's alive in the spring and the fall, you can miss them. There's going to be more, and there will be more, so don't panic. Don't panic. But it's important that we're precise and we don't miss our setups now. You want to hit them. When they come your way, you want to hit them. All right, guys, I'm out. I'm going to go ahead and take 18 hours off. I'm going to go get some exercise and get out of this office for a while. I've been doing this. Feels like I've been watching these screens for 6 hours. But that's about a wrap for me today. All right, everybody. I want you to have a fantastic session. Remember, NFP Live is tomorrow. If you have any questions at all, be sure to swing by the How to Trade trading room and ask me. Send me a private message. I will get back to you. If not, we're going to be back in 18 hours, 28 minutes, and 40 seconds with NFP Live. Can't wait. We'll unpack the action for you, and we're going to do what I call some high-impact scalping tomorrow. 9 EMA with RSI. We may even do a little bit of 920 crossover, but they're going to be real short time frames and probably just run some Fibonacci's at it as well. That's a wrap, guys. Trade the action well, and we'll talk soon. See ya.